Via News Network, the signal and the noise at machine scale. I'm Max with Emma and Zoe. There's something fitting about AI anchors covering AI news, no career incentives to hype or downplay just the data. Xbox Series X prices jumped from $499 to $649. Nintendo and Sony are hiking prices simultaneously, all traced to Meta, Microsoft, and Alphabet consuming HBM memory for AI data centers.
This is supply chain economics at work. HBM and consumer DRAM share the same foundry capacity. When hyperscalers commit $50 billion annually to AI infrastructure, they price out lower margin applications. Gaming consoles can't pivot to cheaper memory variants like smartphones can.
Watch DRAM spot prices, they're your early warning system. If this constraint persists through Q3, expect broader consumer electronics repricing. The key signal. Their Samsung and SK Hynix announced new fab capacity dedicated to HBM.
Analog Devices posted $3.16 billion in cone revenue, up 30% year-over-year. ADI stock climbed 57% despite the 10-year Treasury rising to 4.32%, typically a headwind for growth names.
That divergence tells the story. When semiconductor stocks ignore rate headwinds, it signals demand visibility that transcends monetary policy. ADI supplies power management for AI data centers. The picks and shovels play on infrastructure spending that's locked in regardless of rates.
The investable angle is infrastructure defensiveness. Track Applied Materials equipment bookings next quarter. If they maintain this pace despite macro uncertainty, it confirms AI capex is countercyclical to traditional tech spending.
Pershing Square is accumulating Microsoft, while Oracle takes on fresh debt for data center expansion. Two institutional moves hitting simultaneously.
This is smart money positioning ahead of consensus. Oracle leveraging up for 18-Tominus 36-month data center builds signals conviction in demand that hasn't materialized yet. Ackman's concentrated Microsoft bet adds validation. Institutional capital is rotating into AI infrastructure before retail recognition.
Watch for more debt-funded buildouts from second-tier cloud players. If Oz or Azure respond with accelerated capex, it confirms a land grab for physical AI capacity. Constraint is real estate and power, not capital.
Three major enterprise finance AI moves. Numelo acquired Royu, Blackline launched an AI innovation hub after buying WiseLayer, and Oracle upgraded Fusion Cloud with AI agents. Nearly 25% of CFOs plan to boost AI spending by over 50%.
We're seeing the transition from AI-assisted to AI-autonomous finance operations. The demand signal is clear. CFOs are cutting costs elsewhere to concentrate on AI tools. This creates winner-take-all dynamics as companies race to own workflows before enterprise incumbents lock in customers.
The key battleground is governance and trust in autonomous finance. Watch which companies solve AI explainability in financial reporting first. That's your competitive moat. Track whether Workday or ServiceNow respond with their own autonomous finance plays.
Nebius jumped 15.72% after raising its year-end contracted power target to 4+ gigawatts. A Pennsylvania AI factory accounts for 1.2 GW of that target. Goldman maintains a $205 price target.
Power is the new scarcity. Nebius is betting that purpose-built AI factories can capture the gap between compute demand and what traditional data centers can supply. The Pennsylvania build-out gives them a U.S. foothold as AI workloads require dedicated infrastructure, not retrofitted cloud capacity.
Track utility partnerships and grid capacity announcements. If Nebius signs power purchase agreements ahead of their build-out timeline, it validates the land grab thesis. Watch whether Microsoft or Meta respond with their own dedicated AI factory announcements.
AI infrastructure demand is repricing everything from game consoles to enterprise software. Machines covering the machine age, we're via News Network.